Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, November the 26th. The year's 2024. Let's talk trading. Reprogramming losses, part 2. These videos are for educational purposes only. Your results may differ from mine. And since we're talking about losses, let's make sure we have our risk management in place so we don't lose more than we're willing to lose on any one single trade. Reprogramming losses. Now, I read an email, and it didn't have anything to do with trading, but it had to do with doing things that have impact on your life. And so, if you start to think of trading as having an impact, when you're trading, if you think, well, what impact is it going to have if I only take a 5-pip loss? You know, what impact would it have if I took a 100-pip loss? You know, what impact would it have if it wiped out my account? And so when you think trading in terms of impact, it then changes, you know, your internal dialogue. And it's like, you know, if I take this trade, is it going to impact my account, you know, in a severe way? Or if I keep adding to this loser and it keeps going against me, what kind of impact is that going to have? And you don't want to have it so you wind up blowing your account. I mean, the whole idea is trading, you got to stay in the game to make money. But, you know, you can't make money if you're not in the game. So we really have to look at the impact that the trade will have. And also, if you think of trading in terms of impact and losses in terms of impact, it might help you stick with your trading plan. Because, you know, what happens is, you know, we have our plan set up, and so, you know, I've got a rule that I really don't want to go against the M30 candle color. You know, it used to be the H1, but it's M30 now because you can see how many times we get these flip-flops. And so, if I stick with that rule, then I'll be okay. But if I don't, I can get burned. So you can see right here, I had a trade signal, but the M30 is red. So had I taken that trade, I'd be underwater. I'd be a lot underwater. So just having, you know, these simple rules, and that would have a negative impact on my account right there. I mean, we're talking 4 pips in less than a minute. And so by doing that, you can say, okay, I don't break that rule because it's going to have a negative impact on my account. And I don't really know just how much of an impact. And we know price can move. And look at this. We're getting ready to possibly break the M30 low of the previous, or the low of the previous M30 candle there. And you can see here, we're putting a new 3-ball. So that's one of the reasons why I try not to break that rule. And if I do break it, because, you know, now we got a 3-ball down here, that was a 2-ball, I might take the trade if I get the signal. but I didn't get a signal, so I don't take the trade. So, when you're making your plan, your trading plan, and if you start thinking in terms of impact, and then when you're in the moment, I've talked about being a trained monkey for probably over a decade. And some people go, well, why don't you just write an EA? Well, in some cases you can, but in some cases there are other things like, okay, time of day, news, etc. There's lots of reasons for you to be at the controls. I mean, some people could say that, well, that's not a good plan. If you can't automate it, then it must not be a good plan. Well, there's just so many different things to take into consideration that maybe with the help of machine learning, you can say, okay, here's my plan. You give it, and then the machine will start to make adjustments. But unless somebody out there has something that's sophisticated, it's probably not going to work out. And you see here, you got a signal to go long off of a 3-ball. And that would have been good for a couple of pips. I'd be in and out. Why? Because that M30 is still red. On the other hand, we do have the daily green. So that makes me look for long opportunities. But all you have to do is flip over to the M30, and you can see when you get the long opportunities. And see here on the M30, it signaled long, but hey, it was a reversal. And you know how much the M30s like to cover. And once again, cover is when the high of the current candle is above the top of the previous M30 and the low of the current candles below the bottom. And so this one got covered. And so you look for a cover a lot of times before you look to go long. I mean, in this case, you got a long signal, it covered. In this case, you got a long, there wasn't a signal, but you can see here, no cover, tried to cover, no cover, no cover. You got a cover, tried to cover. Here it covered. So it's just one of those things. There's a lot of covering of M30 candles. But then again, during the New York or end of the London-New York crossover, that's a lot of times when you're going to make your daily high or daily low. And you can see here, today is the 26th. So you can see here in that London-New York crossover, we put in the daily high. And then what happened? Price reversed off of that daily high. So, once again, reprogramming what a loss means can make you, instead of being mad because you lost, you say, hey, you know what, I want to make sure we don't have a high impact against my account. Or it also can say, you know what, this trade isn't part of my plan, and if I get in, there's a possibility it's going to have a negative impact on my account, and I don't want that. So, and the one thing I found about this little trigger that I'm using, the higher, you know, if it makes a lower low but then close above that previous, I think it's close above the previous close to get the signal. I have to look in the code again, but, and you can see here why I don't like to go against that M30, and even got a short signal there, because it made a higher high and it came back below that high, and there it goes down. Not only you're trading against the M30, you're trading against the H4, which is something else you probably really don't want to do. So in this particular case, you can see it looks like it gapped down and then shot back out of that lower wick zone. And that'd be a turn trade area. I'm not sure if I have a turn trade wick zone. This is just a lower, it's the same thing here, but this lower wick zone, price shot out of it. And you know, the other thing about thinking in terms of impact, you know, when you start loading up indicators or you start adding things to your system or your plan, or you're using multiple systems, you know, you can almost always find a reason to go long, and you can almost always find a reason to go short. In other words, you can almost always find a reason to get into the action. But what that does is that'll have a negative impact on your expected value. Because if you've got one system, say like the wick zone, you know, 70% of the time, price is gonna exit that wick zone. I mean, it happened here, then it happened here. That's a profitable trade. You see it's happening again. If you take those wick zone trades, but then you add something else into it and add something else, then you're just messing it up, as opposed to just sticking with this horizontal line. You know, with the M30 candle color, you go short, and it had a nice breakout. See, we got down to 69, so that would have been worth 3 pips. And then the question is, you got your 3 pips once, do you go back to the well or not? Once again, impact. You know, is the downward move over? Well, here it came back, it made a higher low, a lower high, inside bar, another inside bar, and look what happened. It broke that inside bar and went to the, you know, inside bar, outside bar, inside bar, inside bar. You know, it broke all those highs just now. Put in the one ball. So right here might have been a decision to make. Do I get back in that trade? Impact. It's like, well, how many times is going to make lower lows? How many times is going to make higher highs? You can look at the count. So, fellow traders, it's Thanksgiving week, so be careful if you're in the USA and you're out on the roads. And think of the impact of the decisions you make on your portfolio, your trading account. Because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.